Very good morning and welcome back to Core Finance TV. I'm Malcolm Graham-Wood and today is my CEO interview day, except today I've got an executive chairman to talk to. Andrew Austin is executive chairman of RockRose Energy. Welcome back, Andrew.
Pleased to see you again, Malcolm.
Great to see you. Just to begin with, there can't be many people who don't know everything about RockRose, but could you just give us a thumbnail sketch of what RockRose is, please?
Well, surprisingly, I think there are quite a lot of people who don't know everything about RockRose, which is probably why the share price is where it is at the moment. Basically, we set up the business three and a half years ago with the intention of acquiring assets that were unloved by other people. And, you know, there's been a number of people, there's a bit of a changing of the guard going on right now in the North Sea. And you know, Japanese have left, the Americans are all leaving at the moment. And we basically sat there and said, there are opportunities arising from this. And we're going to try and take advantage of those. And that's what we've done.
That's what you've done.
And, you know, in a funny sort of way, we sort of built an oil company the other way up. Yeah. We bought production assets. We're extending the life of those production assets rather than trying to go off and explore.
So you're looking at the building up long-term production targets. Your strategy is to leverage on the existing deals that you've done and building RockRose like that, yeah? Yeah,
I mean, look, we've kind of built an oil company the other way up to the way in which people normally build one, in that we're buying production first, and then we're buying into development assets. We're not interested in the business of undiscovered hydrocarbons. You know, we're only interested in discovered hydrocarbons. But because we've got cash flow coming out of our assets, we can reinvest that. And if we can reinvest that wisely in development assets to just push out that decommissioning position and make money for our shareholders on the way through, then that seems to make sense.
Good. Well, we'll come on to decommissioning in a minute, and I like the way that in almost every asset, probably every asset you've bought, the length of the life of the fields and so on has been pushed out. What I'd like to do, first of all, you come back into the studio with the share price having doubled since the last time and more, and that's primarily because you've just done the deal with Marathon North Sea, Marathon UK. It's a substantial bunch of assets. It's a substantial bunch of people and a business. Why don't you talk us through what attracted you to Marathon, how much you paid for it, and how important it is for RockRose?
Well, it's important for RockRose because it's significantly increased our production position. It's given us a whole series of expertise, which means that we can entertain other transactions as operator, which we weren't able to do before. But fundamentally, you know, Marathon was a US company who wasn't focused on the North Sea, and we were able to take advantage of that and get a good deal for ourselves on the way out. Now, in the end, we paid $95 million for it, but it had $250 million in the bank. And yeah, that was a good deal.
So it's difficult for people to strip out, because what people want to do straight away is say, you know, you paid $5 a barrel, but of course, and you'll say it was less than that or whatever it has to be, maybe. But of course, you've got 2C resources in there which could increase the situation. So is it probably not a wise thing to do to try and just say price per barrel because of the cash that brings you? And so
it's probably not the right way to look at it. But overall, if you look at where RockRose stands now, we've got 63 million barrels of reserves. We've got 87 million barrels of 2P plus 2C. You know, you put that on a very modest, you know, $5 a barrel metric. That's an awful lot.
We'll come back to the share price in a minute.
Everything ultimately is always about the share price, Malky, you know that.
And during that, you mentioned operatorship. Now, I know that there's been a little bit of discussion in oil circles recently about the operatorship. Have you got any comments on that at the moment?
Yeah, I mean, Tucker have tried to. Tucker is the larger partner in the Bray area. They own slightly more than we do. We've been operators since the outset. What's quite frustrating is, while they're trying to unseat us as operator, they've not explained why.
Yeah.
And that's sort of inconsistent with the Mayor principles, the maximising economic recovery, UK government principles on these kind of issues. So it probably will end up in court. There's a bit of toing and froing going on right now. Yeah. Fundamentally, it doesn't affect the financials of RockRose because, anyone who's an operator in the North Sea cannot have any financial benefit or any financial detriment as a consequence of being operator. Yeah. So if we do end up, if TACA do prevail, which we hope won't be the case, but if it does, it does, we won't be any worse off financially. We still own the asset. We all of our costs associated with exiting being operator will have to be paid by the partnership. So financially, it makes no difference whatsoever. It's an irritant. It's a diversion.
But yeah, I understand. I'd like to know why you've concentrated entirely and exclusively on the North Sea, and within that there are probably two or three smaller questions. Is there still a natural supply of potential sellers of assets in the North Sea? Are you finding that, I'll come on to other M&A activities in a minute, but there are presumably underinvested companies still in the North Sea. Does the opportunity still excite you in the North Sea?
Yeah, there's still a lot to do in the North Sea, both in the UK and the Dutch sector. We've been slightly cautious about going into the Norwegian sector at the moment, because there's quite a lot of costs associated with being there. Yeah. And it makes more sense being in the Norwegian sector if you're an explorer, because of the tax regime.
The tax rate, yeah.
But we think there's still lots of opportunities. I mean, we're in 4 or 5 data rooms right now, looking at other transactions, from small complementary ones to quite significant ones.
Now, it wouldn't be a bad time to talk about the decommissioning, because all the assets that you have, have to a certain or larger extent, smaller or larger extent, a decommissioning element. You seem to have got that sorted now, haven't you?
I mean, everyone, when they look at RockRose, they think it's all about decommissioning, and it actually isn't. Yeah, I was actually at a dinner night before last with the CEO of the OGA, and I explained a metric that we've used actually in our last report and accounts, which is effectively the half-life of decommissioning. So, on acquisition with RockRose, of the assets that we've acquired to date, pre-Marathon, the date at which half of our decommissioning spend was behind us and half of it was in front of us was 2026. We've actually pushed that out now to 2031.
Right.
That's a big issue. Yeah, that makes a massive difference. That's good for the country. It's good for the shareholders. It's good for the financing of where we stand. And I think we've actually got a lot more transparency about decommissioning than a lot of other listed companies in London. It doesn't matter who you are. It doesn't matter where the asset is, whether it's in the North Sea or whether it's off the west coast of Africa. If you've got blob amount of 2C resource or 2P resource, you've still got to decommission it.
Yes.
Yeah. And it's there, and we've put cash against it. We've got restricted cash positions. We probably shot ourselves in the foot, frankly, by being as open as we have in comparison to.
But you've got restricted cash, which will specifically.
But we very much understand that position. Our production profile is a lot flatter than I think people think. If you look at the presentation we've got on our website now, you can see what that looks like. That's just off a reserves basis. That doesn't even include the 2C position. So the non-sanctioned position, and that's not even undiscovered hydrocarbons.
Yeah.
That's discovered hydrocarbons in all cases.
I put that down as upside. Well, just before we leave the North Sea, we hear talks that you're in.
We're
talks
not leaving
with,
the North Sea.
No, you're not leaving the North Sea.
We're committed to the North Sea.
I'm going on to the next question. Is not about the North Sea, but on the North Sea, BP. You're in talks with them about Foynehaven in terms of extending the life and the performance of Foynehaven. How's that going?
I mean, we're right now we're running a very extensive TAR period. So a lot of work's going on right now to upgrade the vessel to make sure it can last a longer period of time. I think from BP's perspective, and I can't speak for BP, but RockRose is committed to that asset and to invest in that asset and in the wider Foynehaven area. I think that's quite encouraging for BP because Marathon, with no disrespect to Marathon, they didn't want to invest any more money. They didn't want, their whole strategy was about getting out.
Yeah.
And so the likes of a RockRose coming in saying, okay, run us through how we can extend this, run us through how we can make more value into the space is exciting for BP as a partner. And it's the same thing as we're running with Shell in the Greater Arran area.
Yeah. And
so,
Bray, might you do the same with Bray, given the chance?
Well, we're drilling 2 new wells in Bray towards the end of this year. The rig's currently sitting in Nig at the moment to drill those 2 wells. Yeah, exactly. We've already extended. We're carrying a date post 2030 for Bray Alpha, whereas Marathon was carrying 2026, 2027.
Yeah.
We've putting a proposal in today to the partners in terms of East Bray and extending that for a further 3 years at least. There's always also the option of Quad 9, which is potentially tying back assets to the east of where we stand into East Bray. So our one of the things that we gained with the Marathon team and now the RockRose team, and it is fully integrated now. I mean, if you walk into our offices in Aberdeen, if you walk into our offices in Aberdeen, the only person that still refers to it as Marathon House is a taxi driver on your way in from the airport. No, and everyone's embraced that and embraced it very enthusiastically. There's a real skill set around decommissioning, and we've sat in numerous data rooms across the North Sea, and I have to say that the team that now are RockRose were more thorough in their pricing and their understanding of the issues, built out of the basis of the Bray Bravo experience. So Bray Bravo, one of the largest platforms in the North Sea. Sort of 11 stories high or whatever if you go out there. I've been out there a couple of times. It's now, we've disembarked from that. All the wells are hydrocarbon free. They're all P&A'd, and now we're just waiting for the heavy lift to deal with the top sides. That skill set is very, very valuable and means that we can price our other decommissioning liabilities across the North Sea really, really well. And that I think we're best in class on that, frankly.
Excellent. Now, I've got a question on M&A, which is always difficult partly because you already referred to the fact that you're in 4 or 5 data rooms, partly because you're quite right, they're never going to tell me but you are going to tell me that you've not stopped looking, you're still looking to build the company, and you've got a very strong balance sheet. So a roundup on M&A as much as you could?
As much as I can. Malky, you've known me a long time. Obviously, we're still acquisition driven. We want to put more development assets into the mix. I think you saw that in the pitch that we took against IOG earlier on in the year. Very strong set of assets. Couldn't get it at the right price. Slightly frustrated by the administrator of
the debt.
the debt. But I think that shows the ambition.
And it's gas. That would have been gas, and gas is a big part of your portfolio.
Gas is a material part of our portfolio. I think gas is important going forward. I think the oil gas mix is slightly changing. You know, oil is going to become more of a commodity for the petrochemical industry rather than being something that's going to be burnt. Gas is the transition fuel in terms of where we stand with renewables, etc. RockRose is really looking at trying to work out where it can pitch itself in terms of the renewable mix and our carbon footprint position.
Yeah.
And I think over time you're going to see some messages coming back from us on that.
Yeah.
You know, we want to again be best in class on that front in terms of managing that and the way in which we play that. So, yeah, the gas price right now in Europe is pretty low. It's a very strange curve. You've got a very low front end. You know, the longer term, 2020, 2021 prices of gas are significantly higher.
Yeah.
We would like to put more gas into the mix, one way or another.
Because anyone you speak to would say that domestic gas in the UK, apart from the fact that it doesn't always come from anywhere in the UK, it has a reasonably strong profile price-wise in the longer term, which you'd agree with. I would like to address the share price, and within that, I think it's very important because you have a very strong group of supportive shareholders, and you've got a lot of retail shareholders. So, I know that all CEOs and chairmen say to me, share price is too low, but you've got a specific situation here which you have addressed in some ways in the past. So you've got a cash element which is equal to pretty much the current share price, which I'd be interested in your comments on. And in terms of returning funds, over the last year or two, or in fact right from the start, you have returned funds in special dividends. You've bought the shares back because I remember you saying to me at the time, I can't think of a better investment in the marketplace. People are asking whether you're going to produce a dividend and have a regular dividend policy. That's a lot of questions, but maybe you could run through how you feel about all. I
wish I had a piece of paper in front of me. I could have written all those questions down.
The share price is too low.
I'll try and deal with it. I'll try and deal with it. Yeah, the share price is in the wrong place. If you look at us against our peers, in terms of flowing barrels, in terms of 2p, in terms of 2p plus 2c, it's clearly the wrong place. It should be in a different place. Part of that is actually a consequence of us being victims of our own success. Mm-hmm. Yeah. So, there are people that put money into RockRose at the beginning. Friends of Andrew Austin, etc., and they've made a truckload of money as a consequence. And so there's
I was there. Not me personally, but I remember when it happened. People with vision did.
Yeah, and then there was a lot of oil industry guys actually. I mean, a lot of those people were oil industry guys who went, do you know what? This makes sense, and put in some money, and they've made quite a lot out of it.
Yeah.
And there are a couple of reasonably high-profile investors who bet on RockRose and have made a lot of money out of it. The likes of Cavendish, the likes of Macquarie, and those holdings have become material for them. Yeah. And they've gone, do you know what? I just need to. It's not about what the value could be. It's about the fact that I've made a truckload of money, and I need to.
You become a bigger part of their portfolios.
Yeah, but I think certainly in the case of Cavendish, Macquarie's less clear, but I think we've probably dealt with that now.
Yeah.
I think there are a couple of crosses that went through last week that means that most of that selling has gone. So I think that's dealt with.
Yeah. Dividends. Moving on to dividends.
Dividends.
You paid specials. You bought back stock. Might you pay a regular? And
I think we should start putting in place a regular dividend policy, and I think you can see that coming forward from us. We will be talking around that in our results, which come out in a couple of weeks' time. So I think a regular dividend rather than this sort of ad hoc, or we'll do a special or we'll do a buyback. I think we probably need to put something in a regular place. That's a conversation that the board is having right now.
At the moment. And finally, on that, you're aligned with these guys because you've got a big shareholding in the company. Anything you do on what we've discussed here, it means you're aligned with the other shareholders. I
think I'm significantly aligned, to be honest. Look, I am a large shareholder. I'm not looking. One of the reasons that we're not going to go for it's unlikely we'll do a big buyback program, is because I don't think it's right that I put myself in a whitewash position.
Yeah.
So, if we go and buy back a load of shares, then I'm going to have to apply for a whitewash for myself, and I don't think that's the right place to go.
No, I think that's fair enough. I mean, you've got a position. Quick one on something else. Do you do hedging? Now you've increased the portfolio.
We do. We put in place. Hedging's an interesting and difficult conversation because a lot of fund managers, a lot of institutional fund managers, will turn around and say, "We don't want you to hedge."
I know.
Because
we didn't invest in you because you.
We invested in you because you are long oil.
We want the risk. Yeah.
So it's an interesting mix. What we've chosen to do, rightly or wrongly, is to hedge to ensure that we've got the money to do our capex programs.
Yeah.
So we've hedged 3,000 barrels a day at $69, but we actually yield more than Brent. Yeah. So $69 Brent, but we tend to. Most of our cargoes go out at sort of +$2, +3 to Brent. So, but we hedged 3,000 barrels like that. We hedged a proportion of about 60% of our Dutch production at 18 euros a megawatt hour, which comes in at about 49 pence a therm.
Yeah.
And we did that to cover the capex on Arran. Yeah, I mean, Arran's a really exciting project for us.
Yeah, absolutely.
Shell operated.
Shell being with Shell, yeah.
You can be sure of Shell. Sorry, that shows my age, doesn't it?
It does, doesn't it? Yeah.
At least we haven't got a tiger in our tank at the moment. We've hedged that production, but to hedge it to make sure that we've got the cash flow coming off those assets to reinvest in the Arran development. So that's the kind of way we're looking at hedging at the moment, is to make sure that we've got the money for capex rather than actually curtailing any potential upside, downside on the oil price for institutional investors.
Fantastic. Now, we could go on for ages here. We've already overshot our time. And before I finish off, if you could just do what I always ask at the end of an interview and say, I mean, you pretty much put it in here, but where do you see RockRose in the next 12 to 18 months? You more of the same, continue to build the growth, strong balance sheet, strategic objectives?
I think it's more of the same. Yeah. I mean, I think, we've done what we said we were going to do.
Yeah.
When opportunities present themselves, we'll take advantage of them. When people want to leave the area and that creates opportunities for us, we'll do it. Yeah.
Yeah.
We do have a strong balance sheet. We've got $300 million of cash on the balance sheet right now. That means we've got a war chest that can fund, an acquisition of $1 billion if we need to.
Yeah.
But if the right deal comes along at 10 or 20 million, we'll go and do that as well. So there's no lack of ambition.
Yeah.
In where RockRose sits, and we will continue to look at significant transactions and continue to look at one of the things I'm most proud of actually is the Arran transaction.
Yeah.
And it was just because we were in the office.
Lastminute.com almost, wasn't it?
I don't want to really be compared to Martha Lane Fox, but we were in the office. We had attention when everyone else was sitting on the beach, and it created an opportunity which is hugely accretive to where we stand, and it put us in a position where we could buy a development or buy into a development with first-class operators at exactly the right moment for a knockdown price.
No brainer. Yeah.
Well, just see what we've done. We're going to continue to do the same things as we've done, and I don't think that should be disappointing for shareholders.
I'm sure they won't. Andrew, thank you very much indeed. It's been a really fascinating chat.
Thank
you
you
could
very
talk
much.
for ages. It's a pleasure. Well, thank you very much for watching. I'm Malcolm Graham Wood. My guest today has been Andrew Austin, who's the Executive Chairman of RockRose Energy. Thank you very much for watching, and I look forward to seeing you again soon. Bye now.